This is Matthew Cratter from Trader University, and today I want to talk about Bitcoin crashes and whether you should be worried, whether I'm worried. If you're interested in learning how to make money in both bull and bear markets, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. So yesterday, Bitcoin went below 10,000 for the first time, really since, call it July. And I actually wasn't even aware of it at first until I began to get a ton of emails and texts and YouTube comments. So I just want to talk a little bit about Bitcoin crashes, how I deal with them, etc. Now, the first thing I should point out is that Bitcoin is still up 43% on the year. People fail to realize this. But the problem is Bitcoin's very volatile. It sort of swings between people. A couple weeks ago, people were saying, oh, I missed out on Bitcoin. I'm never going to be able to buy it. And now I have people texting me and emailing me saying, I bought Bitcoin. What should I do? It's crashing. Is it going to zero? So, as I've always said, I've only allocated money to Bitcoin that I can afford to lose. I think it's going to be hugely successful. I think it's going to trade in the hundreds of thousands, if not the millions. But I've already written off the money that I've put into it. And as such, and because I believe in this thesis very strongly, I don't check the price at all. If you're sitting there watching the price, it's one thing if you're trading Bitcoin. But if you're a long-term investor in this, if you followed my videos, if you follow Plan B's work on the stock to flow model, which is why I'm holding this. And again, none of this is investment advice. It doesn't apply to anyone else, but I'm telling you what I'm doing. If you have this long-term perspective, you really shouldn't be checking the price at all. Now, I have to check it occasionally because I make videos about it and people ask me, etc. But if I didn't have a YouTube channel and if I wasn't running these courses, I would basically never, ever check the price of Bitcoin. And let me tell you why. First of all, here's some sort of classic Bitcoin crashing memes. If you own some gold coins as a hedge against inflation, as a store of value, maybe just because you like old golden coins, you're not going to be online every single day checking the value of the current value of them. Maybe you check once a year or so if you decide to raise some cash, etc. If you own a Picasso, you're not constantly checking the latest Sotheby's bids. If you own a beach house in Hawaii or California. Now, why do I use these examples? Well, these are all scarce assets. Real estate on the Pacific Ocean is very scarce. Picasso's limited quantity. Same with gold coins. There's only so much gold in the world. I believe all of it could fit into an Olympic-sized swimming pool. So these are scarce assets. These are hard assets that hold value over time. And I treat Bitcoin the same way. Bitcoin is actually even more scarce than gold. It's more scarce than real estate because there are only 21 million Bitcoins. This is really the core of the thesis. And so the real question is what percentage of the total Bitcoin in existence that will ever exist, which is 21 million. And it's probably a lot less than that because a lot of Bitcoin have been lost and will continue to be lost. So what I would say is don't ask what Bitcoin is trading at in euros now or in dollars or in yen or whatever fiat currency you're used to thinking in. Don't ask where it's trading. Don't ask why it just broke 10,000. Now, if you're a short-term trader, obviously these levels are significant. We're still here in an uptrend because the blue line's above the red line, 50-day moving average, above the 200-day moving average. We did break the 50-day moving average. So if you're trading this, maybe you bought this breakout here and it's going to turn out to be a fake breakout. Who knows? And so you take your stop at the 50-day moving average. That's one thing. That makes a lot of sense if you're a trader. But the one thing you shouldn't do is you shouldn't buy Bitcoin as a long-term investment and then check the price every 10 minutes, monitor all the support levels, etc. It doesn't make any sense. Maybe do a position that's a trade in Bitcoin, a position that's a long-term investment in Bitcoin. That's one way to do it. But what I would say is that if you're investing in Bitcoin, you know it's risky, where there's some known risks, and then there are unknown risks, which I haven't even thought of yet. And so because it's a new asset, it's a scarce asset, I think it's going to be one of the most successful assets of all time, and it already has been in terms of its returns. It was trading for a few pennies just 10 or 11 years ago. But you know it's risky, and you should only invest what you can afford to completely lose. Because if it breaks down, it could break down very quickly. It could trade down to a penny and stay there. It could also crash if you get someone trying to manipulate it or sell a lot, hit the bid sell millions or tens of millions or even billions of dollars very quickly. You could drive down the price. You could drive down the price to $1,000 or $100 or $10 or even $1. In my opinion, it would bounce right back. But this is why I'm not using a stop loss on it. And that's why I don't check the price, because I don't, having a nice weekend with my wife and kids, I don't need to see how much money I've lost on paper. And I think the on paper piece is key. A lot of people I think are much too comfortable holding US dollars. And US dollars fine to hold over short periods of time, but it is a wasting asset. It's an asset that the Fed is printing more of. It's not like Bitcoin. So I'd say if you're investing in Bitcoin, you already know it's risky. Don't put more money in than you can afford to have to go to zero. If you owned a bar of gold, would you keep checking the price of gold every 10 minutes? No, you wouldn't, because you know you own a scarce asset. You've done your research on gold. You own it for a reason. And so everyone has to ask why they own Bitcoin. Now, one of the things about Bitcoin, because it's so valuable, you have to have conviction to hold it. Maybe you just put a very, very small amount of money in it, and so you don't really care what happens. But the only way to hold it through volatility, if you have a significant position, whatever that means for you, a significant percentage of your net worth, if you need the conviction to hold it through the volatility, and you need the education as well, which is why I've made so many videos about this, both to sort of work through the ideas myself and also to share them with other people. And so that's why it's important. People are always asking me, give me a stock to invest in, give me crypto to invest in. Well, this doesn't really work, because if you don't have the conviction, especially long-term trades like this, where you can see your investment evaporate by 40, 50, 60, 70% very quickly, you have to understand why you own it, and you have to believe in it. If you just are buying it because you saw some YouTube video about it, you're just not going to have the conviction. And so that's why I spend some detail on Bitcoin. So here's what I ask instead of asking what the price is. How can I get my hands on more Bitcoin? How much Bitcoin could I get for whatever is sitting in my garage? Maybe there's a motorcycle that I'm not using anymore. Maybe there's something in my attic that I could exchange for Bitcoin. Maybe I can sell my rare coin collection and put that into Bitcoin. Or I could clear out some shelves of books that I don't read anymore, or some old kids' clothes, etc. What can I do to get my hands on more Bitcoin? I've been getting a lot of emails from people who own like the airline stocks or Wells Fargo stock. Warren Buffett's selling them, and so they're wondering what they should do. I don't know. I wouldn't. When Buffett is getting out of a stock, I certainly wouldn't want to be in it. So one idea is, if you no longer have conviction in these stocks, why not convert a small percentage of that to Bitcoin? Go through your portfolio, see what you're holding. If you're holding some obscure stock that some stockbroker told you to buy 5 years ago and it's gone nowhere, and you don't even understand what the company does, you should think through what to do with that money. Not necessarily put it in Bitcoin. I think Bitcoin's the best risk-reward investment right here, but you should take money out of things you don't understand and carve out a small circle of competence where you do understand something. Maybe you really understand grocery stores, or you really understand car dealers or car dealerships, or something like this, or you really understand a certain commodity, like you're a corn farmer and you really understand corn dynamics. That's where you should be investing your money, where you have expertise. And you shouldn't listen to me, and you certainly shouldn't listen to your stockbroker, who probably knows nothing. So again, this is not investment advice. This is just what I'm doing. Every day when I wake up, I ask myself, how can I get my hands on more Bitcoin? Not what is the price of Bitcoin, not is it up or down, etc., but just how I can accumulate more, in the same way that it's a good idea maybe to accumulate gold coins, scarce real estate, etc. So I'll give you an example. A couple weeks ago, I used to run a kind of model dividend portfolio on this website, on Trade University, where I was slowly investing into dividend stocks, sort of growth dividend investing. I had $100,000 allocated towards it. I was investing $2,000 per week. I was going to do 50 different stocks. And I woke up one morning and I realized that I was just not excited by these companies. The growth was very slow, and the dividends were, but while they were fine, they were 2 or 3%. It was going to take a very long time. And so I realized that I had just had much higher conviction. And so I liquidated that. I stopped providing that as a service, even though the old videos are still up on my website. I took that all $100,000 and I put it into Bitcoin. And I don't even remember the exact fiat US dollar price that I paid. I think it was somewhere around between 10,500 and 11,500. All I remember is I got about 9 or 10 Bitcoin for it. And I was very happy with that. Something had been bugging me about the dividend portfolio. And once I put in Bitcoin, I felt much better. And I was very happy to have those 9 or 10 Bitcoin. Right now with Bitcoin at 10,200, I'm probably down on that position. But it doesn't matter. It doesn't matter. I got my hands on some more Bitcoin. And when I see one of these Bitcoin, I don't see something that's worth $10,000 or $11,000. I see a Bitcoin that is going to be worth $2 or $5 or $9 or $10 million in 5, 8, 10 years from now. And a lot of people ask me, I consider that in terms of today's purchasing power. So I don't think the US dollar goes down 95% in 5 or 10 years. It's going to go down. Maybe it goes down even 5 or 6% a year, but it's not going to crash like that. We don't need it to crash for Bitcoin to do well. But when I look at Bitcoin, I see like a little mini Picasso portrait. I see a beach house in Hawaii. I see these things as being very, very valuable. And this is what happens when you have something that takes over a category. Bitcoin is driven by network effects. It's either going to be hugely successful and it's basically going to take over the whole world, or it's going to go closer to zero. It's really binary. It's just like something like Facebook. It either takes over the world and becomes worth hundreds of billions or even $1 trillion, or it just stays very small and local. It's just for Harvard students or something like that. So when I see a Bitcoin, I see a rare asset, but I don't even just see $9 or $10 million sitting there. I see something that I'll probably never sell, that I'm very happy that I got my hands on, so I can pass it on to my kids, my grandkids, my great-grandkids. And so I'll give you a phrase that I use that I found helpful. It's all over Twitter. I'm not sure who really invented this. Value your wealth in Bitcoin. Now, this is, of course, only if you believe in Bitcoin. If you think it's a scam or it's a Ponzi scheme or that it's run by the Russians or the Chinese or something ridiculous, I address all these things on my YouTube channel, then obviously you don't want to value your wealth in Bitcoin. This also doesn't mean that you want to put your whole net worth into Bitcoin, because if it goes to zero, I don't want you to be homeless or traumatized, etc. This is something that you have to decide how much to allocate. Some people will do 0%. Some people will do close to 100%. I made a video about someone who contacted me who showed me how they sold their house and put it all into Bitcoin, hundreds of thousands of dollars into Bitcoin. So there's different versions of commitment and conviction. But I would think, rather than valuing your wealth in US dollar, at least dollars, at least this is how I think, I value my wealth in Bitcoin. And I think in terms of Bitcoin and its future purchasing power. You may have seen stack sats, stay calm, stay humble, etc. Sats are a subdivision of the Bitcoin. One Bitcoin can be divided into 100 million Satoshis, or sats. So if you've seen stacking sats, that's what this means. So just a reminder about why I own Bitcoin. And it's not just because I see that the price is going up, etc. But Bitcoin, there's this famous Mark Andreessen saying that software is eating the world, and this has really proved to be very prescient, that software is taking over everything. And Bitcoin is software as a store of value, and it's basically taking over the world. It's now worth $180, $200 billion market cap, and it should continue to grow. So Bitcoin was first just cryptographers, specialized mathematicians, sort of hobbyists in Silicon Valley. This is the same way that the PC started in Silicon Valley. And now billion-dollar NASDAQ companies like MicroStrategy are buying it. A couple weeks ago, they put most of their cash reserves into Bitcoin. They bought $250 million worth of Bitcoin. This is a very smart company run by a very smart guy who's created a couple multi-billion-dollar companies. I think that government officials around the world are probably buying it. I think probably some countries or their central banks are buying it. So there's this game theoretical approach to this where the sooner, if you think something is going to take over the world, the sooner you buy it, the more of an early adopter you are, the better you're going to do. And this is why MicroStrategy's move was so brilliant. because they got their money into Bitcoin, and then now all these corporate boards all around the country and all around the world, all these large tech companies especially, are thinking, well, maybe we should diversify some of our cash, sort of our corporate cash, rather than having it sit in bonds that are yielding close to nothing. Maybe we should put a little bit in gold. We should put a little bit in Bitcoin. But MicroStrategy was the first mover, and so they will benefit more than anyone else if you start to see huge corporate flows, huge hedge fund flows, even central bank and country flows. The first country that buys Bitcoin, once it's announced, there will be a mad rush for Bitcoin. It's just like if a country invents a nuclear bomb, all of a sudden they have a giant advantage, even if they can't really use it, but then everyone races to catch up with them. And I think Bitcoin's a very similar thing. And as more people buy it, as the market cap grows, its sort of economic bandwidth will grow, and it will become more useful for everyone in terms of the market cap. Like, you can't have a global reserve currency that has a $200 billion market cap, but once it starts getting in the trillions, then all of a sudden it gets very interesting, not just to pensions, but also to countries and central banks. I'll tell you another interesting thing. I'm constantly hearing from people on my channel, people who trade altcoins. A lot of the XRP army told me this, or people who trade Cardano, etc. They say they trade altcoins so that they can accumulate more Bitcoins. Now, I've never heard anyone contact me and say that they trade altcoins or they trade Bitcoin so that they can accumulate more Cardano or XRP. Bitcoin is the category winner, I believe, in terms of cryptos, in terms of a store of value. I think Ethereum is very interesting. I don't think Cardano or XRP are that interesting, but this is really money, like many network effect areas, is a winner take all category. And that's why people often call me or call other people Bitcoin maximalists as sort of an insult. But I think what they fail to understand, it's sort of like saying that someone's a Google maximalist or a Apple maximalist. When a company becomes successful, when you get these network effects in place, they do have, they become self-reinforcing. You get these positive feedback loops. You start getting exchanges that trade futures on Bitcoin. You start getting hedge funds investing in it, etc. This isn't happening for XRP. There are no futures exchanges that offer futures and options, or at least traditional ones that offer futures and options on XRP. So Bitcoin, in addition to being the first truly scarce digital asset, I think of it as like base layer money or final settlement money as well. So if you have a dollar bill or a gold coin in your pocket, it's yours. There's no settlement risk. It's not like when you have stock in a brokerage account or you have money in a savings account and then maybe the government decides that you were doing something illegal and they freeze your account. This is very different. This is final settlement money that you control, in the same way that if you have a dollar bill in your pocket or you have a gold coin in your pocket, you control it. It's yours. There's no settlement risk. And that's what's so interesting about Bitcoin, is that it's base layer money. It's not like one of these tokens that's built on top of the Ethereum network or built using Ether, where there's some sort of underlying layer there, which is Ether. Bitcoin is what it is. It's final settlement money. And if you control the private key to it, if you don't own it in the form of GBTC or Robinhood BTC, where you don't really control the private key and your account can be frozen, or the Bitcoin can be hacked if you leave them on Coinbase or Kraken or Gemini. But if you control your private key, if you hold it on a hardware wallet, if you have a seed recovery phrase, then the Bitcoin is yours and you can value your wealth in Bitcoin. We already talked about the guy who sold his house and put it all into Bitcoin. I wanted to just finish with the metrics I watch. So I don't pay that much attention to Bitcoin price. At least I try not to unless people ask me about it. But I'll tell you what I do watch. I watch the total hash rate, which is sort of the power of the Bitcoin network. All the miners are hooked up. And this is the most powerful computing network in the world, obviously. This is the total hash rate of the network, which is a measurement of the security of the network. And you can see that's sloping up to the right very nice chart. It is volatile. Obviously, there are ways you can smooth it. You can look at the 30-day average, etc. But this is the kind of chart you want to see higher highs and higher lows over time. And if this continues to perform like this tells you that the network is strong, that more computers, more miners are constantly being added to it. Equipment's being upgraded. It means it's a vibrant, secure network. I also pay attention to the stock to flow price, which you can get on the Clark Moody Bitcoin dashboard, which I'll link to. It's listed right here. I believe this is using like a 365-day average. So according to the price model, Bitcoin should be trading at 15,545. Now it can trade above this price for a while. It can trade below this price for a while. But what's happened fundamentally since the May 2020 Bitcoin halving is we've moved from a stock to flow of around 32, and it's now moving up to 56. It's basically already moved there because the number of Bitcoins being produced every year and every day and every month has been halved, cut in half since the halving. So I pay attention to this. I like this look into Bitcoin stock to flow model chart, where you can basically see the wiggly line is obviously the price of Bitcoin itself, and then this red line is the model price based on Plan B's work, and I can link to some of that in the description notes below. But you can see that we're tracking very nicely along this line. Even in 2020, we're trading below it right now. But this is a great way of sort of keeping track where Bitcoin should be. So you've probably heard me say in various videos that Bitcoin should be at new highs by the end of the year. This isn't just a random opinion. This is basically taking into account the model, which has Bitcoin at 31,337 on December 30th of this year. Now, of course, it could be trading below that, could be trading above it. But that's one reason I think that we're going to be at all-time new highs by the end of this year. Maybe September will be volatile. Maybe the election will be volatile. Maybe the election will be very smooth, and all this fear that's priced into the market will go away, and we'll get a huge rally. It's hard to say, but this is the big model. This is sort of the prize to keep your eyes on. And if we look ahead to next summer, we look ahead to a similar time next year, say the beginning of September 2021, we have Bitcoin here at 91,000. And then if we look at this time in 2025, we have Bitcoin trading over 1 million. Now, this model doesn't have to hold. It can break, anything can happen. But this is one metric that I keep my eye on, in addition to keeping my eye on the hash rate. And so I'll just end with this phrase. I think that if you're a long-term Bitcoin investor, if you're a Bitcoiner, if you believe this sort of thing, and you don't think we're all just crazy, that this is a helpful sort of mantra to keep in your mind. Whenever you want to check the price of Bitcoin, just say to yourself, I value my wealth in Bitcoin. Value your wealth in Bitcoin. Now, of course, you have to do your research on Bitcoin. You have to understand it and be comfortable with it. Otherwise, this is asking yourself to do something impossible. But I think if you read Plan B's papers, which I'll link to below, watch a couple of my videos, and really spend time thinking about it, and then only allocate money that you can afford to lose, then you'll be fine no matter what Bitcoin is doing. We're currently entering the most bullish part of the Bitcoin cycle. It's that 12 to 18 months after the Bitcoin halving. And so it remains to be seen if this cycle is like the previous cycles. But if it is, we should be trading at all-time new highs within just a couple months. And people won't even remember this dip. People will be telling you that, just as they're telling you right now, that Bitcoin's overpriced at 10,000. They'll be telling you that it's overpriced at 20,000, at 50,000, and 100,000. A lot like these people who always said that Amazon was overvalued and was a money-losing company. This is why it's so important to do research yourself. Really understand what the Federal Reserve and the central banks are doing with their money printing, and really understand how Bitcoin functions as a scarce digital asset. So I think I'll link to this video whenever people, in future crashes, when people get worried. I'm almost certain that Bitcoin will get to 100,000, and then it's going to crash back down to 60,000, and everyone's going to tell me what a bad investment it is and how scared they are, etc. This is really the pattern with Bitcoin. And so it'll be fun to look back and see if that's in fact what happens. But I'm extremely bullish on Bitcoin. I'll probably never sell my Bitcoin. Just as if you had a nice house in Hawaii or California, or you had a Picasso, you could sell it at any time and get a lot of money for it. But a generation later, anyone in your family who knew you used to have that, I know a guy who used to, whose father used to own a couple acres in what is now downtown Jackson Hole, Wyoming, and he got a good price for it. I think he sold it for a couple $100,000, and now that land must be worth $20 or $30 million. So I think of Bitcoin in the same way. It's a scarce asset. I value my wealth in Bitcoin, and I want to hold on to it, hopefully forever. At least that's the plan. Please hit that subscribe and like button if you found this video helpful. Let me know your questions and comments in the comment section below. And have a great weekend, great Labor Day, and I'll see you in the next video.